Last night, Trump dropped a 25% bombshell on foreign cars. Could this trigger a global depression? Stay tuned. I'm Steve Van Metre. My subscribers just locked in a 7% gain in less than 2 weeks, and we're already on to our next big trade. Stay tuned to the end of the show to learn how you too can make big money in the markets. Now, let's pick today's story up with a headline as Trump's auto tariffs, threats on allies, intensify trade war, and the signs are that this is just beginning to heat up. And for workers all around the world, this is a major risk because we've already seen the factory sector slow down since the pandemic as demand is decreasing. What this threatens to do is pull forward even more demand before the tariffs hit, and that means a lot of workers could find themselves on the unemployment line. And it's not just workers at the factory level, it's workers all the way across the supply chain, as you're about to see. And if enough people lose their job, could trigger an all-out global depression. What we're going to be doing is a 25% tariff on all cars that are not made in the United States as Trump pushed ahead with a program seeking to bring more manufacturing jobs back to the U.S. And while it sounds like a great idea, we're going to create more jobs here at home. The question is, will this do more damage in the short term and plunge the U.S. economy and the global economy right into a depression? I want to know from you. Weigh in the comments, what do you think is going to happen? Because hours later, Trump suggested further tariffs would be imposed on the European Union and Canada if they work together to do economic harm to the U.S. The reaction in currency markets was rather benign. And Trump casted tariffs as, quote, permanent and said he was not interested in negotiating any exceptions. The tariffs will be already on top of levies in place and would result in $100 billion of new annual revenue to the U.S., according to the Trump administration. But there's really one question here. If we're going to drive more revenue from tariffs, are U.S. consumers going to pay 25% more for vehicles? I really don't think that's going to happen because it's a substantial amount of money. Now, if the U.S. economy was booming, if we were seeing incomes rising faster than the tariffs, which we're not seeing, then I could make the case that they would actually absorb those higher prices. But if we see a big increase in automobile prices, I think it's going to outright crush demand. I want to know what you think. Are you looking to buy a car in this market? Do you think 25% price increases will scare people away? Do you think that this is going to bring a big windfall to the country? Weigh in the comments below. Because Ontario Premier Doug Ford, the leader of the province that's home to most of Canada's auto industry, said it was virtually guaranteed that Canada would retaliate. He urged Carney to, quote, target American cars as U.S. manufactured vehicles have a dominant share of the Canadian vehicle market. And that's what we're likely to see from other countries that are going to target U.S. manufacturers just as we're targeting them. It's going to lead to price increases for consumers all over the world. And the reality is it's going to lead to a big decline in demand. And we're already hearing that from automobile dealers today, saying on response to the tariff announcement that there's no more deals, that if you want something, time to buy today, because prices are going up April 2nd across the board. The tariffs imposed today will make it more expensive to produce and sell cars in the United States, ultimately leading to higher prices, fewer options for consumers, and fewer manufacturing jobs in the U.S. And the first two are absolutely true because in the short term, prices are going to go up and we're going to see less options because foreign manufacturers are going to have to decide if U.S. consumers are willing to pay a 25% premium to buy their vehicle compared to something else. And the reality is, based on the direction of the U.S. economy and where incomes are going, it's highly unlikely we're going to see a flood of foreign cars hit the U.S. market. Now, will it lead to more U.S. jobs? That's the big question because right now it means we have to have foreign manufacturers build factories. And right now we don't have the infrastructure for them to transition here, meaning in the short term, it's going to lead to fewer manufacturing jobs. But while Americans grip with higher automobile prices, incomes are need to go up. And that means you need to make more money. And check out our trade here on Brazilian equities. We bought this back on March 10th and less than 2 weeks later got stopped out for a nice 7% gain. And you too can take advantage of trading in this market and making big money. Stay tuned to the end of the show or grab the links in the description below. Be sure to use a coupon code for a free 30-day free trial. Let's look at the effects of this as earlier this month, Audi to cut 7,500 jobs as Germany's auto industry struggles. And after April 2nd, when demand plunges and these tariffs go into place, what's going to happen is auto manufacturers are going to be forced to cut production. And that means they're going to be forced to cut jobs as well. And the risk here is for Germany's manufacturing sector, which is heavily dependent on automobiles. They're already in a depression. And this actually will be the nail in the coffin that plunges the Eurozone into an outright massive financial crisis. But they're not the only ones, as Japan faces similar risk. As Trump's additional 25% duties will be collected from April 3rd, could wipe out around a quarter of Porsche and Mercedes' projected 2026 operating earnings. To offset the impact, manufacturers may have to raise prices or ship more production to the U.S. Well, there's no question they are going to raise prices, but the reality is of shifting production, well, that takes years of planning to build factories, build the infrastructure, get people hired and trained. It doesn't happen overnight, and that's the problem here, because when these manufacturers see their demand goes down, it means the labor market is going to respond. They're going to be forced to lay people off. And you can see the effects of what happens when you raise prices into slowing economic growth. If we take a look at the U.S. Consumer Price Index in blue against total incomes of production and non-supervisory employees, that's shown in red also on a year-over-year rate of change. So we're going to see automobile prices skyrocket. Now let's go back in history and look at what happens when prices rise and income growth slows, because you can see in the late 1980s, the consumer price index surged. At the same time, income growth was slowing. Consumers couldn't afford higher prices right into the 91 recession. We see that happen going into the dot-com bubble. Those prices rise, but workers don't see their incomes go up to absorb it right into the dot-com bubble. Happens again going to the global financial crisis as energy prices zap household budgets against slower income growth right into the global financial crisis. And these tariffs are threatening to drive consumer prices straight up. At the same time, what are we hearing from manufacturers and in the services sector is hours worked are starting to get cut. Some jobs are lost here. And what this is going to do to automobile manufacturers all over the world, it's going to lead to mass layoffs. But it's not just those who work at the factories that are going to be affected. Trump has argued, though, that tariffs will help spur growth in the domestic auto sector and force companies to move more production to the U.S. Now, I want to know what you think. Do you believe that that's what's going to happen? Do you think there's going to be a flood of new factories built here and that foreign manufacturers are going to start building all of their cars in the U.S.? Or do you think this is going to backfire in a big way and plunge the U.S. and global economy into a massive depression? Weigh in the comments below. Love to know what you think. Trump's actions are poised to make cars more expensive for U.S. consumers that are already uneasy about inflation and amplify worries that his tariffs will pitch the economy into a downturn. And that's my concern as well, because when manufacturers cut production, that means they cut their spending. And for the services sector, it derives 70% of its revenue from manufacturers. So when manufacturers see things are going bleak, well, it's going to have an impact on the services sector as well. And tariffs will likely raise the prices of foreign-made cars, but even U.S.-made vehicles will see price increases if supplies and parts are hit by levies or if supply chains are cut off from manufacturing in lower-cost countries. And we're seeing that there's going to be a huge fallout here, again, not just at the manufacturing level, but across the entire supply chain. And you can see the effects as we go back in history, what happens when prices go up as incomes go down. Let's now overlay continued unemployment claims in green. And what do you see? Continued claims head higher right into the 91 recession. It happened again going to the dot-com bubble, once again going to the global financial crisis. And again, it's all signs consumers cannot afford higher prices. And now the risk is starting April 2nd, consumer prices likely to head higher. For the moment, it's not impacting the labor market, but I'm going to show you it's likely to hit that next. But again, it's not just Germany and Europe that's facing a crisis. Japan's economy could get shoved right into a recession as Japanese car makers face catastrophic profit hit from Trump's auto tariffs. And that's because about 46% of all new cars sold in the U.S. are imported. And look at the imports. Volkswagen, number one. Honda, Kia, number two. Mercedes-Benz, then Renault, Nissan, and Mitsubishi, followed by BMW, Toyota, and even 46% of GM vehicles are imported, meaning prices are going to go up across the board, even on American vehicles. This is a big risk because, again, for Japan, their economy is largely dependent on exports of vehicles to the U.S. And there are very few winners, as consumers will be losers because they will have reduced choice and higher prices. But one notable winner in the tariff chaos is Elon Musk, as his factories are in California and Texas, which turn out all electric vehicles that it sells in the U.S. But Elon said, wait, Tesla's not unscathed here. The tariff impact on Tesla is still significant. But I want to know from you, do you think this was a Trump administration giving a nod to Elon Musk? Do you think he's a big winner here? How do you feel about that? Weigh in the comments below. I'd love to hear from you, because for Japan, autos account for greater than 30% of Japan's exports to the U.S., which imports, again, about 46% of all automobiles sold each year. So the risk here is for the Japanese economy. It could send a lot of people to the unemployment line as production of vehicles plunges amid this 25% price increase. And based on the average selling price of $45,000, the value of imports would exceed $330 billion, and U.S. import tariffs could have a major impact on sales and auto demand. All else being equal, they would raise about $100 billion in annual tax revenue, assuming people kept buying and were willing to pay higher prices. But all else will certainly not be equal, especially once exporting nations slide into recession, which exactly is the case I've been making, and their exports industries are crippled. Again, they're seeing here in real time the game plan of the Trump administration: push everybody's economy into recession, hope that yours doesn't go, and next thing you know, everybody's back to the negotiating table, and fast. But I want to know from you, are you going to pay more for a vehicle? Or are you going to keep your old one? Weigh in the comments below. I'd like to know. As Goldman expects price increases to spread across the U.S. auto industry, and after several years of pain, terrified exports will find some parity with domestic producers. And am I already hearing from some dealerships that on April 2nd, they're raising their prices all across the board. But the issue here is this isn't going to affect people at the manufacturing level. It's also going to affect people at the dealership level, because if demand goes down, well, you don't need people to sell cars or finance cars. You can cut a lot of your staff, and you're going to do it very quickly. The reality is, if people want to buy a car, well, time is running out before prices go up. But it's not just dealerships and manufacturers that are going to face mass layoffs. Car shipping companies are plunging after Trump's latest tariffs. As we can see, everybody across the industry and supply chain is panicking. And all else being equal, we expect car volumes going into the U.S. to come down, negatively affecting seaborne volumes, and thus also car carrier earnings, meaning we could see a lot of car carrier companies head into delinquency and default on their debt as demand plunges. But again, you also have to think about suppliers and everyone else in the supply chain. Everybody is panicking now, and a lot of people are going to hit the unemployment line. And yet the U.S. economy grew at 2.4% last quarter as corporate profits jumped, and that's what's really keeping this alive. And what the game plan is again, plunge everybody else's economy into recession and hope that yours doesn't follow suit. And right now, the U.S. economy is giving every indication that we can fight this battle and win. As we take a look at this week's initial claims data, coming in at a mere 224,000, still relatively low on a historical basis, suggesting that as people lose their job, that other companies are indeed hiring. Let's take a look at continued claims on a seasonally adjusted basis. They dropped 25,000 to 1.856 million, and on a non-seasonally adjusted basis, continued claims fell 33,000, now down to 2.084 million. And so you can see that the U.S. economy, at least in terms of labor, appears to be strong enough as people that are losing jobs are finding other opportunity. And so the evidence is clear. Until the U.S. labor market breaks, this is going to continue, with the hopes that other economies are going to break and come quickly to the negotiating table. Because Trump says reciprocal tariffs plan on all nations are going to be likely lenient. And that's one of my concerns here, is I think this is about the U.S. economy and about the labor market. And he's concerned that if he goes too hard and too fast, it's going to put a lot of uncertainty in the minds of employers who are going to do nothing but lay people off. And we're going to make it all countries, and we're going to make it very lenient, he said. I think people are going to be very surprised. It will be, in many cases, less than the tariff they've been charging us for decades. We've not been treated nicely by other countries, but we're going to be nice. So I think people will be pleasantly surprised. Well, I can make the case that a 25% tariff on foreign vehicles isn't nice, but that aside, I think the tariffs on automobiles is just enough to push the entire global economy into recession. But I want to know from you, what do you think? Weigh in the comments below. What are your thoughts on all this tariffs? Do you think we come out winners, or do you think think everybody's going to lose big. But one thing you can win out is trading in the market. So check out our trade on Brazilian equities. We got stopped out after less than 2 weeks for a nice 7% gain. And one thing people always ask is, how do you know when to sell? Well, I just let the stop losses do the talking. It was very simple how we did this trade. We told our subscribers to buy right on the open on this red candlestick. Now, we noticed that the trend was rising. We noticed that momentum was up, but it was a machine position that made the difference. We saw the machines were likely buyers here. Now, how did we know that? Well, each and every day we run a screen across a broad equity, bond, currency, commodity markets of how machines are positioned. But we do one thing special, and that's run a historical overlay, so we know when the odds are high, the machines need to buy, and our goal is to position our subscribers ahead of a big flood of buying and get them out before the machines sell. And we have all that data integrated right into our reports. It publishes a hot list each and every day. But what we're looking for is anytime machines need to be big buyers, and that includes when they're in massive short positions, which we track as well. Here's the best part. Not only do you get the report and all of the signals, I review all the trades and give you my opinions on them. I give you risk control levels, a full tracking of all open trades and returns, a weekly update, full disclosure on how I'm trading my own reports, and here's the best part. We give you a free 30-day free trial. Why do we do that? Because we're so confident that you can make money trading our reports that we want your first 30 days to be on me. Grab the links in the description below. Use those coupon codes for your free 30-day free trial. Well, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.